Have you ever had a member sitting right in front of you who owns a home, but you missed the chance to talk about a home equity line of credit? That's a lost opportunity, not just for the branch, but for them. Today, we're going to fix that. Welcome to Module 3 of our HELOC Training Series, Cross-Selling the Right Way. By the end, you'll know how to spot, start, and seal conversations that connect members to the right credit union solutions, confidentially and compliantly. Cross-selling isn't about pushing products, it's about recognizing needs. When done ethically, it deepens trust, strengthens loyalty, and boosts overall member satisfaction. For credit unions and banks, HELOCs remain one of the most powerful relationship building tools. They meet members where they are: home projects, debt consolidation, education costs, even emergency funds. Every HELOC conversation is an opportunity to improve someone's financial life. And every successful cross-sell strengthens our reputation as trusted advisors, not salespeople. Let's start with awareness. The best bankers develop what I call HELOC radar, the ability to hear opportunity in everyday conversation. Listen for these clues. We've been thinking about remodeling the kitchen. We still have some credit card debt we want to get rid of. College tuition is coming up fast. Interest rates are so high right now. I wish there was another option. When you hear one of those lines, your HELOC radar should be going off. Follow up naturally. Have you ever looked into using your home's equity for that? It can be a lot cheaper than a personal loan. Simple question, zero pressure, but it opens the door to education and solution based on conversation. Once you identify the opportunity, shift into discovery mode. Ask open-ended questions. What's your goal for the home project? How soon do you plan to start? How are you planning to cover those expenses? Active listening shows you care and builds rapport. As they share, connect their needs back to the HELOC benefit: flexibility, lower rates, access to funds on demand. Here's an example. Since you're already a member with great payment history on your mortgage, you could qualify for a home equity line of credit that keeps your cash flow steady and interest low. You've now shifted from salesperson to financial partner. A winning HELOC pitch isn't a script, it's a story. Here's the 3-part framework. The first is connect emotionally. You worked hard to build equity in your home. Let's make that equity work for you. Number 2, present the facts. Highlight flexible access to funds when needed, lower rates than credit cards. Interest rate may be tax deductible for qualified uses. Number 3, empower the decision. Whether it's a remodel or debt payment or pay down, this HELOC can help you reach that goal faster. Here's a tip. Keep it conversational. Avoid industry jargon. Speak like a coach, not a banker. Every objection is an invitation to educate. Common ones you'll hear: I don't want another loan. That's fair, but a HELOC is different. You only pay interest on what you use, and it gives you control over your cash flow. I'm worried about variable rates. Totally understandable. Let's walk through how our rate caps and repayment options work to protect you. I don't think I need one now. That's okay. Many members open a HELOC as a backup fund for emergencies. It's there when you need it and free when you don't. Approach with empathy, use data, and reinforce trust. Transparency always wins. Now, let's cement those skills. Pair with a colleague and roleplay 2 scenarios. Number 1, customer mentions how renovation. You identify the need and offer a HELOC solution. Number 2, customer expresses concern about interest rates. You address it and build trust. Use the 3-part pitch and objection framework we covered. Record your interaction if possible and watch for tone, pacing, and confidence. Remember, every great advisor started as a learner who practiced consistently. When we cross-sell responsibly, we see results: higher member satisfaction scores, increased loan growth and share of wallet, stronger long-term relationships. But the real impact is the human, helping someone build a deck, send a kid to college, or sleep better knowing they have financial flexibility. That's what this training is all about. Bravo team, you've completed Module 3. cross-selling HELOCs the right way. By applying these techniques, you'll not only meet your branch's goals, but also transform financial conversations into meaningful member partnerships. Stay tuned for Module 4, where we'll dive into member retention and relationship management, keeping our HELOC customers engaged long after funding. Until then, keep serving with integrity, confidence, and purpose. This is Jay Get It, helping you make banking simple and impactful.